Bill Smead, one stock you like in the Smead Value Fund as well as Fargo. They were already having a tough year even before this account creation scandal. So why do you want to stick with the stock now?
Well, you pay a very high price for a cheery consensus. And between the political climate being as negative for banks as it's been, and then you throw on a company stumble in here, it's everything a contrarian value investor would like. Low PE, high dividend, great company, big mistake, there'll be some fallout from it, financial strength to rebound. It's got everything we like.
And Berkshire Hathaway is another one of your top picks. They own a whole lot of Wells Fargo. But Berkshire Hathaway, it's up around 11% this year. They're beating the S&P after a few years of underperforming it. So I guess, is Buffett back? That's the big question.
Well, Buffett is betting on a much stronger economy. And when you're an insurance company, the best thing that can happen would be higher interest rates. He has $70 billion in cash. As capital becomes more dear, he's in a better position to take advantage of other people. So he owns Wells Fargo, he owns Bank of America, he is highly leveraged to higher interest rates, and the insurance company has constant capital needs to be deployed. So he turned the corner, you might say, this last year.
And you're also a fan of Disney. Disney's down 12% so far this year. It's been a very volatile stock, Disney. One would think they've been doing fantastic because of a healthy consumer. They're even getting paid more, which we learned today. So all the focus is on ESPN. Can they overcome that?
Yes, there's been a bit of a transition. We're going to go from an economy dominated by mid-20s males watching ESPN to 35-year-old married males with 2 kids watching ESPN other than fighting with their 2 children over the Disney channels. Disney is the largest babysitting organization in the world. Adult males through ESPN, the parks and the cable channels and ABC. So they have demographics in their favor. The next 10 years should be a booming time for the production of 5-year-old persons in the United States.
And then finally, you like Gannett, which is down almost 30% this year. They're trying to get that deal with Tronc finished. It's taking them an awful long time. So how much longer can you stick with Gannett?
Well, we've been in it for 7 or 8 years already. Pays a 5% dividend, 5% plus dividend right now. Secondly, they've had a very strong balance sheet in preparation for doing this transaction. Thirdly, most important thing, no one else in the United States is attempting to aggregate a nationwide network of news delivery by print and digital. And if they can get that, that's very appealing to advertisers, number one. And number two, to a place called Facebook that wants you to spend more time on Facebook. And they've found the thing that would make you spend more time is to watch videos from network affiliated TV stations or read news articles that are repositioned. If they had a business relationship with someone that could give them nationwide, the USA network nationwide, that would be a big asset for Facebook.
All right, well, thanks a lot, Bill.
Thank you.
And thank you for watching The Street.